Moon Gang.
Welcome back to Power Hour Dumb Money with your host, me, Matt Kohrs, coming at you live through the interwebs. Sit down, strap up, because we are going on quite the ride. You know, when I wasn't here, things were looking a little bit iffy, we'll say. Maybe that's a good word. A little precarious if you're looking for another SAT level word. But hey, look at it now. We're coming back. I mean, I know the market's been a little bit wonky. I'm excited. I mean, AMC, this is nice stuff. AMC recapturing 42. GME's looking amazingly good. And I'm not saying that AMC's like not looking good. AMC's looking good. It just so happens that over the past like couple of trading days, GME's looking like legitimately freaking great. Tesla fighting back. We got some fellow Tesla traders in the Discord. I hope you're holding on to some of those calls because you're fighting back to at least be able to get a little bit of your tendy town. You left us in the market dip. Coincidence? Hey, I'm happy I'm back right now. Hey, before we get going, if you guys could just help me out a little incy bit with all the algorithm, whether you're on Rumble, Twitch, YouTube, if you could hit the like buttons, the Rumble buttons, the subscribe buttons. I don't care if they're synthetic, if they're real, if it's all good. I mean, if the market's allowed to have synthetic crap, why can't we here in the interwebs? It's just my going thought. All right. So I do want to talk a little bit about Elon and Tesla. So Tesla, crazy day. Opens up at 1,160, goes all the way up to 1,200, comes all the way down to 1,130. Now we're fighting back and potentially going to make a new intraday high by close. But the stories, Elon is hilarious. Like this stuff is too funny. JP Morgan's Jamie Dimon and Tesla's Elon Musk feud behind the scenes. Bank's lawsuit against electric vehicle maker brings the CEO's long simmering tensions into the open. And I've never seen someone be so incredibly vicious. Recently, you may have known about Elon talking to the Senate chairman, telling him it looks like his pee-pee just came. Maybe you know about his commentary to the likes of Bernie Sanders, another senator, saying, didn't know you're still alive. Well, this particular interaction is full scorched earth. It is. He took him down. This JP Morgan, I don't know what this will do to the company, but I just don't know how it could possibly bounce back after this interaction. A small part of the quiet feud, which pits America's most valuable car maker against the biggest bank, spilled into the open last week when JP Morgan sued Tesla. In its lawsuit, JP Morgan said Tesla owes it $162 million from a trade that the bank helped arrange back in 2014. Just for a little bit of, I guess, scale of how much money this is. Okay, $162 million. Tesla's now worth over $1 trillion. Typically, bankers seek to avoid public fights with big clients and even potential clients anxious about winning fees and worried about the slightest insult could cost them access. Slightest insult, definitely going to cost them access. Now, this is coming from JP Morgan. We have provided Tesla multiple opportunities to fulfill its contractual obligations, so it is unfortunate that they have forced this issue into litigation. And then this is when Musk hit back. If JP Morgan doesn't withdraw their lawsuit, I will give them a 1-star review on Yelp. And it didn't end there. He followed up with, this is my final warning. Now, many times in life, you're pushed a little bit too close to the edge for many reasons. And it's a personal line. And when people cross the line, they cross the line. And this was Elon's line. And he is lashing out, potentially rightfully so because of it. JP Morgan saying, hey, you owe us $162 million. And I guess Elon, the world's richest man, who could arguably play this with like the chump change in his pocket, he's gone full scorched earth. He is taking on the world's biggest bank, and he is threatening, and I would argue in a form, an ultimatum, a 1-star review on Yelp, and then it's his final warning. There will be no more 1 star. This isn't a warning shot. This is it. The next one, he will log on to Yelp and give it a 1 star. Now, obviously, there's billions of dollars on the line between both Tesla and JP. This is a narrative we should follow because you don't know the implications that this could have on the greater market, which is exactly why I'm articulating the story to you. Because, hey, if there is blood in the water, sharks will come. And right now we have 2 great whites fighting it out, and I don't see one of them stepping down. So I will keep you up to date on any of the potential fallout of this scorched earth tactic. I just want you to know, especially if you're at all playing JP or if you're at all playing Tesla, maybe you're playing both of them, but very, very interesting. I was also thinking about it. So Jamie Dimon right here, the CEO of JP, interesting. He's particularly against Bitcoin. He has public commentary saying he doesn't get it. He doesn't even trust that there's only 21 million. And then we know Elon is particularly a crypto supporter. So I almost wonder if this is just like a classic billionaire versus billionaire, like public relevance pissing match. Who knows? I'll keep you updated, and we might want to be tracking Yelp and see what's going on there. Speaking of that, like I said, Tesla looking good, GameStop looking good. We need a boxing match. There's only one Elon. This is 5 stars to me. Elon has too much power. What else do we have? Hang on. I know I have a couple questions here. I'll get back to those. It's the next Jake Paul undercard. How much would you guys pay to see Elon Musk box someone? Elon Musk, Jeff Bezos boxing match. 2 billionaires going into space. If it was a televised event, just to watch those 2 guys, like a legitimate boxing match. Like, I don't know how many rounds it would be. I doubt they have the cardio to go 15, but like, what would be the market on that? Someone says $1. Another one says 10K. I mean, UFC is like $100, $200. I'd probably pay $100 to see all that, how that particularly plays out. To them, even if there's like a huge purse, like that's what's crazy is some of these huge, like record-setting boxing matches, maybe as a business generate like $1 billion in total, and then it's getting split up between everyone. $1 billion. Imagine we're talking about people that like $1 billion probably doesn't move the needle for them. Someone like Elon is worth over 325 billion, and you're talking $1 billion. When you really start wrapping your head around the numbers that these people are involved with and like what their wealth is, it's crazy. It's absolutely crazy. All right, let me get this. Looking good. GME, I called out 250. Let's see, it's at 246 right now. I also pointed out AMC at 44. Got smacked at 43, but hey, I'm feeling confident. We still have 45 minutes, a little over 45 minutes. OG still bought more AMC and GME today. I don't know if Kevin feels positive. I like it. Shout out. Jacqueline Lopez, I appreciate that. Hey, Matt, longtime listener, first time super chat. Just want to say I appreciate that all you do, and I could get a happy birthday. I'm 27 today. Happy birthday. That's so exciting. I'm 27. We're 27 brothers. Look at that. Shout out to anyone else who's 27. If you're not 27, that's tough. Maybe we'll be the same age a different year. But this year, we're going to celebrate everyone who's 27. Everyone who's 27. All right, I see some people saying Prague. What's going on with Prague? Prague's waking up. Hey, Matt, got a call from my dad today and couldn't answer his question. He got into BBBBY at the recent tip, asked me if he heard any internet chatter, but I haven't paid attention to it. All right, let's pull that up. Let's pull up that. BBBY, Bed, Bath, and Beyond. So the recent chatter was more so related to, I believe, the expedient nature at which they were going to complete their share buyback. So I like that. That's pretty bullish. The chart is a nice wedge. If it can close above 24, 25, between the high 24s and the low 25s, if you can get over that hurdle, let's call the hurdle like officially 26, I think it could keep going I want to talk about this in more detail in just a second, but we're seeing, I don't know when he got in, but if he got in here in this mess, the alligator crossing over, we have the lips in the red, the teeth in the white, the jaw in the green, a strong trend to the upside. It's trending. This thing, when it gets trending, it likes to trend. I mean, I think it's kind of a good trade. I don't know what his risk is. I don't know how long he wants to be in it, but I think there is potential. Like, I think I would be more bullish on this chart than I would be bearish for sure. I have no position on it right now, but looks like it could get going to me. GME is getting going. AMC is getting going. Prog, I believe right now, and Discord, please correct me if I'm wrong, is kind of wrapping up a conference right now. I think they have some sort of fancy schmancy, like white coat doctor like conference that they're at right now. So maybe they're saying some positive stuff. We're definitely seeing some buyers off of this important price level at 440. How will JP financially recover from this? I don't know. I have a lot of questions if they would even be capable of recovering. They had a webcast earlier today, if that's what you're referring to. That was 10 a.m. Oh, okay, so it wrapped up. So maybe that's the reason why it actually sold off, was because of maybe not the most positive things being said there. What do we think about PaySafe, PSFE? PSFE, gap down. Is this an all-time low? Yeah, it's catching a falling knife right now. The trend is still very, very bearish. I was just wondering if they have an alligator over here. They don't. Do they even have any reasonable amphibians? I actually don't know if an alligator is an amphibian, but let's just pretend that it is. Anyone who knows a little bit more about the animal kingdom, please inform me if alligators are amphibians or not. Are they reptiles? Are reptiles amphibians? The world may never know. I don't know if we're ever going to get those answers. If AMC hits 50 this week, you should take a shot of absinthe. I would, but I have to like get absinthe. I don't have absinthe. It's a reptile. Does that make it an amphibian? Are those not? Can they be simultaneously the same? I know that frogs are amphibians. Do you think frogs and alligators are related? I'm the person who's willing to ask the questions that's on all of our minds. I know a lot of people are scared because you don't want to seem dumb. You're afraid to put your hand up in class and say, are alligators frogs? A lot of people, you would think that you're going to get laughed at. It might come off as embarrassing, but sometimes you have to be willing to live on the frontier of curiosity to get the answers humanity deserves. Anyway, I don't want to get into the whole frogs being or not being an alligator debate right now. We could save that for another day. Back to PaySafe. I don't like to buy at all-time lows. I would want to see it kind of bend back around. It's just, I think it's scaring a lot of people. Obviously, it had pretty negative earnings. It missed by quite a bit. Dropping. Can I check Ortex on LGVN? I'd be happy to. LGVN. NASDAQ. Short interest, 56.6%. Cost to borrow, almost 400%, 393. Utilization, 96. Shares on loan, 652,000. That's for this guy, LGVN. This is more of a biotech play. They must have had some sort of announcement, some sort of news that got exciting. It gapped down, but then quickly did this gap fill today and has been off to the races. It's up 82%. It's ripping. But the Ortex numbers on it are considerable. I have no position. I'm not really in it. Biotech is probably the sector I know the least about. So it's tough for me to just like hop in without like doing a considerable amount of DD like I did with Prog. It just takes me more time. It's not what I'm like. That's not my background. Can you please comment on ORTX? No one has talked about it. Price jump from 1013 and it is bottom. ORTX. Orchard Therapeutics. I don't think this is the one you're referring to. I'm seeing very different prices. Whatever this is, this looks like crap, this therapeutics company. But the prices that you're talking about seems like a different one. Jacqueline, is this the right ticker? It's insane how BBG can go up. I mean, if it has good earnings, it could definitely go up, but it's clearly been in a downtrend. I'm not seeing any buyers on BBIG. Hey, Mark, you made me money. I want to make you money. Look at BNTX. It's chasing right now after the gap fill, but it has room to go after a pullback. BNTX. It's at resistance right now, and there's this period of consolidation, but if it can maybe get up here, dance around a little bit. What is this? BioNTech. So this is the one that's paired up with Pfizer. They've helped create the Pfizer vaccine. And right now with the booster getting approved and everything, it makes sense that this one's going up. Oh, Jacqueline, I'm seeing what you're saying. The price target forward is 10 to 13. Judging on the chart, I don't know much about the company fundamentally, but judging from the chart, that seems like some wishful thinking right now. Maybe the company wishes it was at that, but people are not buying it up to that level. Matt, how do I make money selling covered calls? Do I need the price to go up or down to make money? How do you lose money on a covered call? So a covered call is when you make money, you are selling premium at first, and you get to keep the premium if you get to the expiration date and the stock is below the strike price. So let's say you did a Tesla covered call for this Friday at 1,200. If Tesla is at or below 1,200, you want it below, you keep the premium that you sold it for, because it's a net credit situation. So you were credited money because you sold premium, and then they're not going to execute it if it's below. So you just get to keep that premium. Now, if it goes above it, let's say if you somehow have 100 shares of Tesla, which would be quite a chunk of change, the risk to you is your profits are capped at 1,200 in terms of your shares. So if it goes to like 1,250, you would miss out on that run up because you have to give up your shares and you're going to get paid 1,200 for it. So even if it's at 1,300, you would miss out on $100 per share, but you still keep the premium. So when you sell covered calls, there's not a way for you to lose money. There's just a way that you could play it in a sense that you don't make as much profit potentially. What are your thoughts on BB? Also, thanks for helping me make money the past few months. Rich, I mean, I'm happy that my frog and alligator conversations is somehow relating to your knowledge of the market. That does make me happy. BlackBerry honestly seems a bit boring. It seems range bound. It's just not a strong trend. And that's exactly what this indicator is for. This alligator indicator, these three lines, three different simple moving averages with different smoothing factors. When they're all crisscrossy like this, that tells you it's a non-trending whatever time frame you're on. I'm on the daily for BlackBerry, and you could just see it. It's done a very good job of going nowhere ever since July. I just don't see a strong trend. And when you're not trending, it's kind of tough to make money unless you're just selling premium. Opinion on HEPS. They got sued for lying and opening a high price and feel like it's undervalued. It's the Amazon of Turkey. Wait, if they got sued, that doesn't sound like a good thing. D-Market Electronic Services Trading? I don't know if I'm looking at the right chart, but if this is the chart, this looks very bearish to me. I think Rivian is currently fundamentally overvalued, but it was also at one point. If it holds 115, that might be fine. But if it can't hold 115, I'd be watching 100. I just like to play it from level to level to level. Hey, Mark, 24/7 audio listener since January. Thank you for your daily dose of humor. What's your opinion on TTG's course? Also give Riley a fat, juicy kiss from me. So I myself have not taken TTG's course, so I can't really comment on it. I have had interactions with the people who run TTG. I think they're stand-up people, which is hard to find in the world of like paid trading courses. Many people who happen to go into TTG they seem to be enthusiastic I believe that they have some sort of money back guarantee. So if you start it up and you do it for the first week and it's just not for you, I believe, please don't quote me on that, but I think there is a money back guarantee. But overall, I like to judge it on the current students and the current members and how they feel about it. And to my understanding, the current members and students of TTG always seem to have a smile on their face. But I think that's the best way to judge a trading course, is not by like the fancy ads and that. Like literally just DM or message people who are members and be like, do you like it? Is it worth the money? Okay, Justin just said money back guarantee is a bit more involved than that. Okay, yeah, I'm not too for like I said, I haven't taken the course. I'm not like a member of TTG, like a owner or anything. Hey Matt, love the stream. You brought a lot to the community. I sent you an idea on Twitter under my wife's account, Julie. Hope you can take a look. Okay, thank you, bud. Thoughts on shorting oil prices using the SCO ETF? SCO. Bloomberg crude oil. You know, I've never actually used SCO myself. The common one that people use is USO. USO seems to be a lot more similar to actual crude oil right now in terms of like the chart setup. Let me check out this other one. Gosh, so to me, SCO, this one, in my opinion, looks pretty different. Well, that's because this is the ultra short. So this is going to be moving inversely than normal oil. Thoughts on shorting oil? So you're saying you want to buy SCO. You want to go long on SCO because you think oil is going to drop. I mean, so let's look at oil. They're going to move inversely. Yeah, oil looks pretty weak to me. I mean, I think the entry was probably closer to here, 78. So you're chasing a little bit, but there's a lot of rumors that there's pressure on the president to use U.S. reserves. And if he releases those reserves, it would drop the price of oil. So I think that like government thesis is there, but it's also the government. It's politics. It's not the most predictable thing. But if you buy SCO, if you buy it, that means you're inherently shorting oil. All right, what else do we have? AVPT. Thoughts on the potential gap fill? Maybe, but right now it's just you're catching a falling knife, which is what you don't want to do. There's no one buying this. Red, selling. There's way more supply than there is demand. So maybe if it starts to swing back around, you could play it. But even that, it has like small ranges, small volume, low volume for a cheap stock. I think there's better plays out there. Better plays. Okay. So GameStop looks great right now. 246. We even have AMC hanging out at 42. GME crushing it, up 7.5%. AMC up 2.5%. Things are looking amazing. This is exactly why yesterday I tweeted when I was doing my, I like to do a lot of chart review over the weekend. And at GameStop, I was blown away. I mean, I tweeted it out there yesterday of how good this chart looked. And I'm still looking at 250. Maybe today. I mean, we have 30 minutes. It's totally possible. But I'm hoping the enthusiasm in this gets AMC to break 43, and then I'll be paying attention to 44. All right. What else do we have? All right. Speaking of, here we go. Let's talk about GME, and more specifically, I want to use this as an illustration for the Alligator Indicator. Why have I been talking about Alligator so much? Well, it's an indicator that I've been getting more and more questions about. So I do want to share a little bit of the math behind it, and more so of how you can use it. When is it appropriate to use? When is it not appropriate to use? And what information in terms of better trades can you actually glean from this particular indicator? So first of all, once again, it is the Alligator Indicator, and it's on this one, if you're using TradingView, it's the Williams Alligator. If you want to check out this charting software known as TradingView, it's in the link in the description below, just so you know. But anyway, let's open it up. So you have three different things: the jaw, the teeth, and the lips. teeth are white. And I know if you listen to Mama Boucher, like that's why alligators are always so angry, is because they can't brush all their teeth. But anyway, teeth are white. My particular alligator cares about, they're a fashion forward in alligator. So they have a lot of red lipstick on, and then a jaw is green because of course all alligator jaws are green. Unless they're not green, then that would be a counterexample to this particular rule. But I just want you to know the colors. I hope this is easy. Red lipstick, white teeth, green jaw, alligator indicator. So what is the alligator indicator? Can I move this over here? As you can see, it's 3 distinct lines, and they're actually all different simple moving averages. There are, I don't know why that's not coming up right now. I've seen it in the past where people will use like a weighted moving average or an exponential moving average. Yes, that's true. It happens, but it is also going to be a little bit more of a rarity most of the time. It's actually going to end up becoming the most common form is simple moving average. So you're going to have faster ones and you're going to have slower ones. So let's start off at the lips, the red lipstick. This one is going to be the 5-period simple moving average. The teeth are going to be the 8 SMA, simple moving average, and then the green is going to be the 13. So it goes 5, 8, 13, just like the Fibonacci sequence. But beyond that, there's also a smoothing factor. And when I say smoothing, it's exactly that. Instead of being so like whippy and choppy, you help smooth it out. And it's also sometimes being referred to as an offset. And it does increase the lag. So the smoothing factor on this first one is going to be 3. And then on the teeth, it's going to be 5. And then on the jaw, it's going to be 8. So once again, just a very quick review. We have 3 different simple moving averages. We have a 5-period, an 8-period, and a 13-period. Lips, teeth, jaw. And then you also have smoothing factors, which just, it's a little bit of lag and it makes the lines a little bit nicer, of 3, 5, and 8. That's the common setup. So now that we have the numbers and what's going on, basically 3 simple moving averages, this is great for trends. Whatever time frame you're on, right now we're on GameStop's daily chart. You can pull this up on whatever chart you want to. But this is all about, is it trending or is it not trending? So when you think about it, when it is trending, and the way Bill Williams, remember the Williams Alligator Indicator, that's the guy who made this up, he kind of referred to it as like, is the alligator asleep or is it awake? So it would be asleep when it's non-trending, when there's a lot of chop. It's a really sleepy alligator. It was out partying. It didn't know what to do. It slept in. It missed work. Its manager's yelling at it. It wasn't able to live stream on YouTube one day. It was asleep. But other times, the alligator is very much awake. And in this scenario, you can see that it's eating up the market. Its jaw is opening. So recently, let's use GameStop from roughly August to September. There was a nice trend, crossed over, alligator's still awake. And then once it starts to cross, like you're using it for the trend, like is the trend intact? So no trend, you get some crossy like chop right here. But most recently on AMC, on GameStop at the end of October, the alligator was clearly awake and we see this beautiful trend. So obviously the farther apart these lines are, that's going to be a very strong trend. So the shortest time frame is going to be the most responsive, the lips, and then the biggest time frame, the jaw down here, remember that's the 13 period, is going to be the slowest moving one. And that's why you see the red line. The lips are a lot more reactive. Now getting into strategy. So we know that this is to identify a trend. Is something trending on whatever time frame? Yes or no. It can trend to the upside, and also previously you can see that there's established trends to the downside. And it's when it gets all choppy that it's not trending. So with that, we know that this is to identify a trend. Now, hey guy, that looks like he's from the neighborhood, Mr. Rogers. How can I use this? Like, okay, I get that it's a trend, but when do I get in? When do I get out? Now, obviously, I'm not a financial advisor. I'm not telling you to actively trade, but I'm just trying to say, hey, this is how you could apply this particular indicator. So at first, when you look up any of the, write-ups, dialogue, listen to any of the videos, it's just going to talk about crossing. So right here, you could see that, okay, all 3, it goes lips, teeth, jaw in that order. Lips, teeth, jaw. And that's an uptrend. When the lips are on top, the jaw is on the bottom. So all 3, as of, I suppose, we we could call it November 8th, November 9th in here. Not necessarily the best entry. In the end, it would have worked out for you because it didn't cross back and you rode out the trend, and that's the uptrend. And then when you have the downtrend right here, you have jaw, teeth, lips. The lips, the red one's always going to be leading the way because it's the most responsive. But anyway, roughly around January 28th, that would have been some sort of sell signal, whether you're getting out of a long, whether you're going short, whatever it is. That's how you would interpret that, because all three are in the same direction. Honestly, this one would have been eyed up July 7th. My point in bringing it up is when you have all three already in your direction, you're usually late to the party. You are typically very late to the party if you're waiting for it to already look perfect. You're not getting your best entry, you're not getting your best exit. So in a little bit of my back testing, when looking at just the best way to use these three smooth, simple moving averages, I think it's actually more interesting. We know that the red, the lips, being the most responsive, well, you're going to see that jump. But then the question is, can you get in before the move? And I think sometimes, and this is going to, in my opinion, be true with a lot of indicators, they're best utilized when they're really, you're seeing movements in conjunction with various other indicators. I would never just use the Alligator. I would never just use RSI or just use MACD. I like to see if things are in agreement across different types of indicators because they all tell you a little different spin on the same story. But anyway, if we were just using this one, and of course you could line it up with a Bollinger Band, stochastic, any of that stuff, like whatever your favorite is. But for this one particularly, I like to see when the bars actually all close above or below all three. So for example, on November 1st, you'd be talking about it because it closed above the red. So it closed above the red, the white, and the green. But right here, we saw that the red was on the bottom. So now we're going to the upside because look how responsive and whippy it was. And then if we just scroll back to here, all of a sudden you have this trend, this trend, and this trend. And then the question is, okay, like when is the trend actually over? Well, all of a sudden now you're closing below it. And then right here, you actually close below all three as of, I guess, the 18th to 21st. And then all three followed from there. That's one way. I've seen this in the past where people like to use it with something like the 50 or 200 day moving average. Is the chart above the 200? Is it below it? Is it above the 50? Is it below it? And if you're above or below, it's playing it in that direction. So it's still like many other things in the market when you're using technical indicators, you're using it as another filter. And this one is particularly a nice filter for, is something trending? Yes or no? And then those are just some different potential entries and exits. Are you going below to on top? Are you on top to below? One way, but I would highly recommend using it as a portion of your prerequisite list for your entries and or exits. But once again, quick recap. Williams Alligator Indicator, 3 different simple moving averages, the 5, the 8, the 13, and then it has smoothing factor of 3, 5, and 8 respectively. It goes lips, the most responsive, the 5, then the middle one, the teeth is going to be the 8, and then you have the jaws. I set these colors up just because it makes the most sense in my eyes to like remember it this way and figure out what's going on. But yes, that is the Williams Alligator Indicator, and you could easily track it down on TradingView or most likely any other charting software you have. It is a pretty popular indicator. All right, what are we going here? Thoughts on short. All right, we did that. Excellent listens. This is why we pay you the big bucks. More of this, please. I didn't know the indicator, and I'm stoked. I do now. You're the man. Yeah. So if you guys want that, we can actually probably do an indicator per day, per every other day. I know this morning I was talking more about like Wyckoff accumulation, distribution, and methodology. That's going to be a little bit longer of a talk. It's a little bit more complex, but I could do like a full-fledged discussion on that. And then we could literally just go down the list of indicators. What is this? What's the math behind it? How to use it? Next day, do a different one. And then I can clip all those segments and throw them up on Kohrs Lite. I recently read a book on TA and charting. It was good, but not like this. Can you potentially look into doing something specifically in indicator class and how and when to use them, but also why? You have a great way of explaining it. Oh, happy to. And this is the stuff I like. Like, I don't want it to be behind some sort of like paywall. I mean, I like this stuff. I use this stuff. It's fun to explain. And I remember some of my own hurdles when I had to learn about this stuff and the questions I had. And I don't know. I think it's better to do it this way. But it's kind of interesting when I was recapping to make sure that I was getting all the explanation of this right. I was finding some factoids about just general market analysis. So most of the money you're going to make, I'm always saying, is it trending? I was actually finding some information on how often do equities and the market actually trend. Surprisingly, it's only 15 to 30% of the time. The other, 70 to 85% of the time is chop. So that tells us that should be reinforcing your mind of you don't need to trade every day. You don't need to be some active trader who's like dropping into the jungle with your machine gun. You don't have to do that. Be more of the sniper. You want to be there and just wait and wait and wait, because the money comes from trends. Trends only happen 15 to 30% of the time, according to some of the data I was just reading up. Wait, patience. Patience pays. Let me actually bring it up. So once again, we looked at it on the daily. Let's throw up the Williams Alligator. So even right here, if we were on AMC today, so obviously the trend was nice, but look at this right here, closed below all three, and yet, see, this is sometimes when you have to use an indicator of cover up the chart. Because like a lot of the times you're using the fact that you know how it goes, and then all of a sudden in your brain, you're trying to fit the pattern to it. And that's a mistake I made a lot when I was trying to figure out indicators. It's like, oh, like you want the indicator to work. Everyone is looking for like the best indicator. So I think there's almost a bias as you're doing your research. You have that hope because you want a nice methodology to work out. So when you're looking at it, drag the chart and literally hide. Because this is what you see in real time. You do not know what's coming next. And ask yourself, would this have actually worked? Like, don't do your breakdown when you already know how history played out. Hide it. So what I was saying before, like sometimes if you're waiting for all three to cross, well, all three didn't cross till here. And that's pretty late. That's actually very late. Well, when I was saying before, look at this. Okay, it was uptrending, but then you had the bar close below all three. So it's just, there's inherent lag to this because of the smoothing aspect. So you want to be a little bit more responsive. And then let's look for the cross back over. We don't know what happens. Boom, right here. So 41.26. We know we're above the 50. We know we're above the 200. So maybe we're potentially looking for entries. So even though they didn't all cross over, we closed, this bar closed. Boom, boom, boom. You would have been sweating a little bit, but in reality, you would have held. And let's just say you could actually like set up your risk as like the bar closing below all three again. So at that scenario, the risk would have been like whatever the bottom is the moving three lines. So you got in right here around 41.25-ish. You were sweating a little bit because you're about to cut it if it closes below all three, but it never happened. And you were able to ride it up and up. And right here, technically, if this closes below, that would be your exit signal. So 25 to 70. And like, that's small, and this is day trading, and I'm not saying I'm being supportive of day trading. I'm just trying to show that there's certain ways, or actually what you could have done was you were riding it to the upside and you had this first closure right in here, so you could have got out a little higher. But even in the worst case scenario, well, not even, because technically it didn't close it below, so your trade might still be live. But that's my point. That's what you mess around with. That's how you develop a methodology that's good for you. Do you only look for long positions if it's above the 50, the 200, and as soon as you get this trigger, okay, well, what's your exit? You test it. You write it down. You get a journal. You get an Excel sheet. Okay, you exit when it crosses over the lips. Okay, what's better? That? Do you want to look at the teeth? Do you want to use all three? That's the exact thing that you can easily test. And do you like it on a smaller time frame? Do you want to use it on the 4-hour chart? Do you want to use it on the daily chart? Those are the little things that you make it customized to your personality and your account size. Trading is not a game of like one size fits all. It's not that whatsoever. Let's see how it would have worked on GameStop. All right. So GameStop, let's say you came into the day knowing, you looked at the chart and you're like, nope, this is bullish. I'm looking for an entry. So this is how I've thought about things in the past, and this is how many traders think about things. You're liking the chart. You know you're chasing a little bit, so you need to be a little bit more careful with your entry. When could you have possibly gotten in? Well, we all know that you're a very safe trader and you don't trade in the first 15, 20 minutes of the day. So that sets us up to here. And you're like, all right, well, what's going on? It went up, it went down. You're seeing a little bit of chop, not really much of a direction. It ripped and you're like, shoot, I guess I missed it, but it never presented that opportunity for you to get in, and that's completely okay. Sometimes you have a bias, whether the upside or the downside, and you just never saw your opportunity, and that's cool. You're a sniper. You're not this crazy person who's just shooting up like wild, like wasting all your ammo. You don't want to just shoot up at the wall and like now you have no more ammo to spread. Sniper. All right, so you're waiting. You're waiting. All right, looking a little bit bearish. All right, you're happy that you didn't create a long position. You're very happy. And now it's to the point that you're below all three. So you're looking for a change of behavior, a change of trend, and you're looking for that explosion above all three, and you can risk either the most recent relative low or another closure below all three. So we were bullish, but you missed it because you were waiting. Then it went bearish, so you had a smile on your face, and you're waiting. Right here, boom, 238 technically would have been the trigger. Right here, you would have gotten in, if you were to have used this methodology, you would have gotten in at 12.25 today, right as it closed above all three. And you're either risking the most recent relative low of 233 or a closure below all. Absolutely no reason to get out. Oh no, I'm frozen. Son of a nutcracker. Is this just YouTube or is it on all of them? Hello, one is the loneliest one. Two can be as lonely. Do I need a hard
tune this? One is the loneliest one. Two can be as lonely as one, but the number one is the loneliest one. I'm on Twitch. Twitch is working. I think it's working. Oh, golly. All right, time to hang out on Twitch. Twitch fam. Oh, YouTube. Someone said, see you later, alligator.
Oh, that's the funniest thing. See you later, alligator. Am I back? I don't know what's working. We back? I don't know how's it going on Rumble. I hope people on Rumble. This is why we're on multiple things, folks. Sorry, but there was a hilarious comment. Someone said, "See you later, alligator." So that was actually really, really funny. So anyway, back to the example. You're coming in, you're all hot and bothered. You're like, I want GameStop. You waited for your entry. You got in here at 238, damn well knowing you're risking either 233.50 or a closure below the three lines, but you went long. All right. And you're waiting, looking good. Sweating, but you get out. Nope. Didn't close below all three. So you're still in. You got really close, but didn't close below all three. So you're still in. And actually to the point that you're in right now. Let's run it on Tesla. I don't know how this works. Let's just see how it goes. All right. I don't know what your bias would have been on the day with Tesla. How did its daily chart look? its daily chart is pretty bullish. So let's say that you were bullish heading into the day on Tesla. Well, like I said, you wait those first 15 minutes. Thus far, nothing is fired for you. So you're jealous. You're like, oh, that sucks. Okay, maybe it doesn't suck so much. Oh, down. Okay, bearish. Whoa. All right, now you're looking for your entry. You want to close. Well, right here, you would have got in at basically 1,180. You would have ended up entering right here, and you're either risking 1,133, which is wide, or closure below all three. Well, at first you're like, crap. I'm like the Matt Kohrs of trading Tesla. Oh, nope, it bounced. I got lucky. Whoa. And then this one, you would have got stomped out right here. So this one would have cost you $10 per share. That one would have been a losing trade. But you would have re-entered right here at 1,175. So this one, it didn't work out. It's not always going to work out. In fact, this is probably the best example I could show you, is sometimes they don't work out. So right here, you're now down $10 per share because you got stomped out. It happens. That's life. You can't cry over spilled milk. But you re-entered right about here, 1,177. You're in. And then this one, you lost another $2 per share. So once again, this is a good example of if things aren't trending, you get chopped up. The alligator is asleep. Alligator's asleep. They're not working. How could an alligator who's asleep make any money? It doesn't make sense. You know, we're going to have to go into a bunch of the archives of Steve Irwin, but I'm pretty sure he's never shown a sleeping alligator that made money. So when it's choppy and messy like this, that's not the environment to do trend-based trades. It's just, it's all messy. It's all messed up. So if anything, I think that's a good example. And then maybe you got so pissed off. So right now you're down $12 a share that you did. So let's say you got so mad, you're like, you know what? I hate Tesla. I'm going to short it. Let's see how this plays out. You would have entered at 1,174. And actually at this point, you're already now positive on it. If you decided to take this signal right here recently. The high was 249.64 on GME, which means I was off by 36 cents of my call on this one. I request the high-pitch Alvin and the Chipmunks voice for the remainder of Power Hour. Thank you, good sir. Jeff, I think that would make a lot of people hate me. Kinky Kong, I appreciate that. Shout out. Cody becoming an astronaut. Hey, can you look up Snap? I have some calls expiring on the 26th. So actually in Discord, someone had asked me about that. It's looking pretty weak to me. I don't know what your strike is. Your strike price, the 26th. So you have 4 days. I don't know what your strike is. I'm just not seeing buyers step in. Fortunately, it is at support. So maybe this is it. Like as long as it holds 47.50. But even if we are using this trend, the trend is still bearish. There's no crosses here. It's slowing down. These lines are getting closer to each other, but it's still bearish. At least in the short term. Hey Matt, Investors Underground has an intro course that talks about stuff similar, but it would be great to hear from an ape land, not financial advice. Would saving money for a big buy be good? But it would be good to hear from an ape land. Would saving money for a big buy be good? Like, I'm not sure if you are referring to like the course being expensive or like just a stock Dark in Flames. If it comes to the course, there's a good chance if you're disciplined enough, you could like find what you need to on the internet for free. Good chance. I mean, I don't know about Investors Underground. I haven't worked with them. I've never taken their course, so I can't say anything good or bad. I'm just saying in general, there's not many trading courses I actually like trust. A lot of them have like pretty strange reputations. But if you're talking about a stock, I mean, I think people should always invest. Like I'm a fan of people putting money generically into the market. I think the earlier you start investing, the better off. Matt, I'm confused about the drama video. Literally, who would have beef with you doesn't really know you. You are an amazing dude. Keep it up. Oh, I appreciate that. I think people are just mad that I make money. And I don't know. Sometimes I could be perceived as a pretentious asshole, which I think upsets other people. But I don't know. I'm not everyone's cup of wine. As Anna would say in Discord, I'm just a few people's plastic bag full of gasoline, and I'm all right with that. Hey, thoughts on KIRK squeezy potential? KIRK. What is this? Is this Kirkland? Okay. Let me see if it has any considerable short interest. Why is it not coming up? Kirkland trades on the NASDAQ. We have a short interest of 13%. So it's kind of there, but I think an important aspect of squeeze potential is how much of the public is supporting it. And this is the first time anyone's asked me about Kirk. I know you're especially hated in Pittston. Oh, that's a good one, Jason. Jason gets the gold star of the day. Everyone very excited about LGVN. It's super chasey right now. Like, it looks good, but your opportunity, most recent opportunity, was to get in here at 19, 20, or let's just call it $20, risking 17, and that's even chasey. This is, if you're not already in, it looks good, but don't chase. I'm begging you not to chase. Chasing, it works out. And then it works until you end up blowing up and all the gains you made on your previous chases like disappear into the ether. Chipmunk voice now. JK, love you, bro. Thank you, Jeff. Saving money regarding sniping, waiting for the right trend. Investors on ground has the intro beginning for free. Hope that makes sense. Oh, yeah. It's so much better to like wait for high odds setups. But even with that, you don't go all in. You don't ever risk all on one play. That's not really trading or investing. That's, I guess, gambling. And that's fine. If that's what you want to do, that's completely fine. But even the best setups there's no such thing as 100% accuracy. The only thing that continually works out in the market is me losing on Tesla. If you're talking about anything beyond that, there's no such thing as 100% accuracy. So that's why and this gets a little bit more mathematical, but it's in terms of just risk management and how much to bet per play. But I think to start off, you should probably get going with like actually logging your trades. And then when you see that you have higher accuracy and higher profit potential on certain setups, well, yeah, it makes more sense that you'd be willing to bet more money on those types of plays. I know the Pittston thing is hilarious. What else do we have going? Spy decided to jump off of a pier. Ooh. Oh, golly. All right, so let's say you entered right here at 471. You're like, hey, the market's overpriced. I don't like Powell. I don't like what's going on. I don't like Pelosi. I don't like the infrastructure bill. I don't like the Build Back Better, whatever the hell it's called. Let's just say you're a negative Nancy and you're like, I want to buy SPY puts. I want to short the SPY. Down with the market. Let's say that was your attitude. Well, your entry would have been right here. You would have gotten in at 471 and you would currently be up. And on the other side of it, you would have gotten in at 472.60 and then you would have ended up getting out right here at 471. So you would have two profitable trades. And that would have been your first trade because you're not going to trade right at market open. This is chop. This is chop. If you wanted to go long, you would have gotten stopped out pretty quickly. You would have gone again. You would have gotten stopped out. You would have gone again. And at this point, you would be boiling. Your blood would be hot. There would be steam coming out of your ears. You go long, you get stopped. You go long, you get stopped. You go long, you get stopped. This time, you would have gone long. You would have gotten in around 471. You would have gotten out for break even. So today was just not a day to go long on the SPY. But if you had went short, you would have had two beautiful trades, one currently being active. Where are we at? 1 minute until market closure. Drama vid winners, you decide. Best mustache, best hair, best background. Tough contest. Appreciate all the community educators and take my money. So take my money. What's going on, dollar? Who is that girl you and Trey were with last night? All right, let's not. We don't need to squash drama just to create additional drama. Can you look at hood alligator thing? Yeah. Well, hang on. Let me do it right when the market closes. We'll do it. Let's watch the closure. Oops. I should probably get on stocks if we're going to watch the market close. 3, 2, 1. Ding, ding, ding. The casino is closed. Folks, that's it for Monday, November 22nd. Someone just very quickly asked me about hood. Let's look at the daily with the alligator. The daily. If you wanted to short it, well, that's tough because you're waiting for the bars to get like created. So let's say you were waiting, and then you got in right here. You would have taken a short position at 43. You would have been like, this is boring. You would have started sweating, but it never closed. So you held, and you would still be holding. The signal for you to go short would have fired back here on September 30th if you were using this methodology. You almost got stomped out on the 21st, but it technically didn't stomp you out, so you would still be holding. Okay, so overall, here's what you need to know. Interesting start, kind of a weird day with the new Fed and all that good stuff. And remember, it's a shortened week, so things are going to naturally be weird anyway. The market is closed on Thursday in observation of Thanksgiving. And then on Friday, it's a half day. The market closes at 1, just so everyone knows. For me, I will be streaming tomorrow, normal schedule tomorrow, but most likely will not be streaming Wednesday, Thursday, Friday. Thanksgiving, wedding I have to go to down in Texas. So that's my personal schedule, just so everyone knows. But tomorrow is a normal day. Speaking of normal days and everything, I'm streaming tomorrow starting 9 a.m. like normal, but then I'll be posting update videos on this channel tonight of like what happened in the market today, and also the clips of whatever happens on stream end up on Kohrs Lite. So don't forget to check out Kohrs Lite. Check back today for the market update video. Don't forget about Twitch. Don't forget about Rumble, all that good stuff. But most importantly, I truly appreciate your support. Trust me, I see it. It means the world to me. And as always, from me and Cher, best of luck in the markets.